Everyone. This is a webinar on propelling your business beyond the pandemic. My name is Glenn Scharf, and I'm a shareholder with Saltmarsh, Cleveland and Gunn. Just a little bit about our firm. In the slide here, you can see we have over 150 professionals across Florida and Nashville, and we also are part of Saltmarsh Financial Advisors and the BDO Alliance as well, which is the 5th largest accounting firm in the world. So we offer a range of services from audit, insurance, tax compliance, consulting, and you can see a whole bunch more over there on the right of your screen. So we serve an abundance of industries as well, and we are a full service CPA firm. So to get you moving, I want to start in a positive manner. Optimism is the one quality more associated with the success and happiness than any other. I really felt that was appropriate to kind of start with in that, in our time, we kind of need a little bit of optimism. In golf, there's an old saying that every shot's a good shot for somebody. If you hit a good shot, that's a good shot for you. If you hit a bad shot, it's a good shot for your opponents. So I'd rather hit some good shots for myself. And so that's what we are here to focus on today, is hitting some good shots. Now, before I get started, we do have a chat feature in which you can type in questions throughout the presentation, and we will be monitoring those. And then at the question and answer session, we're going to go ahead and open those up. And go and go through those as much as we can to the extent that we have time. So I'm going to jump right in here, and we need to plan for three time frames: the now, a short term, and then a long term focus. And so the three things that really we can focus on right now is maximizing some tax strategies, positioning ourselves for a successful return, and then working on your business. We spend a lot of time working in our businesses, but not necessarily working on our businesses. So I promise, I will make you one promise, that for those of you who get glossy-eyed when people start talking about tax, I'm going to get it over with, and it's going to be about 4 or 5 minutes, and that's it. But what I want you to take away from these is that in maximizing these strategies, and it's really in focusing on cash flow. And so these are ways that you can help your cash flow through the tax system, and you can help them right now. And so that's what I mean by the now. So first and foremost, I know that people are talking about PPP loans and asking me how I can get more money and things like that. I'll say that, hot off the press right now, I think the House vote's going to happen today on refunding the PPP and the EIDL programs. And if you haven't applied for those, certainly I would encourage you to apply for those. If you didn't get funded the first time around, especially, you can go back to the bank and they should have you in line, but I would certainly touch base with your banker to make sure that you don't have to do anything else. So getting back to these kind of cash strategies, certainly tax deferrals, tax payment deferrals, everything, any kind of tax payment that's due from now until July 15th is really due now, July 15th. So our tax returns are due July 15th instead of April 15th. All our payments, estimated tax payments, things like that from a federal perspective are all delayed until July 15th. We've also got some deferral opportunities, and this is where you come in that the deferral of our employer Social Security taxes. So this is the 6.2% that we have on everybody's wages up to, I think it's $137,700 for 2020. So the deferral period is from March 27th, which was about a month ago, all the way through 12/31 of this year. So you don't have to pay that portion of your payroll taxes right now, just that one piece. So you can save quite a bit of money. A company with 10 employees with an average wage of $50,000, starting May 1st, over, the rest of the year, that's about a $21,000 deferral. So that can, infuse a little bit of cash back into your business. With the PPP loans, if you have a PPP loan, that deferral period ends when the PPP loan is forgiven. So it's a much shorter time frame to the extent that we've gotten PPP loans. You can defer even if you're paying people under the FFCRA and the CARES Act for people being out for coronavirus, or if they're out taking care of children because they're out of school, those type of things. If you're taking advantage of those, then you can even defer that. The key thing is that the deferral, 50% of it's due December 31st, 2021, and the remaining 50% is due 2022. This also applies to self-employment tax. So if we've got any self-employed people on the line, that's in your estimated tax payments. And so you can reduce your estimated tax payments for that self-employment tax. Next is a little bit more confusing as far as the state tax deferrals. Many states have just extended to July 15th. But for some reason, some others haven't, including the one we live in. Florida, interestingly enough, all the C corporation returns are due May 1st. We have yet to see any movement on that from our Department of Revenue. I know I read something the other day that the FICPA is lobbying very hard to get these dates moved, but considering that it is April 23rd, we are a week away from that date. Certainly most CPAs are planning on filing those returns. The sales tax, not much deferral there. Once again, our March sales tax was due April 20th. We have until April 30th to pay those. Just check your states and where you're doing business in, and whether you can defer payments until July 15th. Most of our surrounding states, Alabama, Mississippi, Georgia, those have all been extended to July 15th. The last two things, NOL carrybacks. Back when Donald Trump passed his first tax bill in 2018, if you had a business loss in 2018 or 19, you could not carry those back and try and get refunds from prior year taxes. We now have the ability to go 5 years back to claim some of these refunds. And the really important thing about that is that, if you go back to 2013, 14, especially if you're a C corporation, well, that's a 35% year. And if going forward, which was what we could do, now we're only into 21% tax rate years. So it's definitely much more advantageous if you can carry back. This applies to individuals as well. You can carry back your business losses if you have those on your returns. The last thing that I want, as far as taxes are concerned, qualified improvement property. We had a little blip in the 2018 Tax Reform Act for Trump, in that the qualified improvement property is kind of defined as restaurants and rental spaces that are building out. So if you built out an office complex, or if you built out tenant improvements, essentially. Basically, those were meant to be deducted for 100% depreciation in year one, but they made a little mistake in the law and classified these as 39-year property, and the bonus depreciation only applied to 15-year property. So they went back and fixed this. Now, what kind of impact does this have? I'll tell you, I got a client, they did a build out of some office space. They spent about $500,000 building out a medical office. And now we're going to go and claim probably a $150,000 refund. So that's something that, we're doing right now. Don't know when we're going to get that money, since nobody's at the IRS processing paper returns or anything like that. But you can also claim them if you haven't filed your 2019 return. You can file that on your 19 return and be part of that electronically filed return, which will happen much faster. All right, now for the good stuff. Positioning ourselves for a successful return. These things are kind of all interrelated, but I want to go through them one by one. Developing a customer plan, protecting your supply chain, securing your workforce, and activating your Salesforce. These are the four things that you have to plan around in order to come back successfully whenever we get to that point, hopefully very soon. So developing a customer plan. This can start with your reviewing your customer list. Certainly some businesses are more customer oriented and they know their lists. For example, in our business, we know who our customers are. In a restaurant business, obviously you may not know. So you may need to do some analytics. So analyzing sales by customer, things like that. Check your POS systems if you're in retail or whatnot. So you can coordinate that outreach to your customers. A lot of places now and a lot of businesses have the ability to do outreach to their customers, either through email, through text. If you've got apps, phone apps, you can do it that way, or you can make phone calls. I know that here at Saltmarsh, we're doing several of those and trying to reach out to our clients and making sure that A, they know that we're thinking about them, and B, to see how we can help them. The other thing in developing your plan and your customer plan is, consider the changes in customer behavior. If you own a clothing store, for example, do you allow returns still? Do you wash, clothes that come back to you? Do you allow, how many people do you allow in your store? So those types of things that you have to kind of look at in your business. And if those are effective from your business, you may have to do things differently. You may have to repurpose space to serve your customers differently. Certainly, if we come back with a maximum capacity on retail or maximum capacity on restaurants, you may have to repurpose your space, have less tables, things like that. I know I've been into Lowe's over the last couple of weeks, been at home being, and able to do some repairs and whatnot. But when you go in there, they've put up shields at their registers. So different things like that, where you may have to just kind of think about what your customers really need and what they're expecting at this point, because that's still going to be on their minds. Even if we kind of start to reopen in a slow basis, people are still going to be a little bit cautious, most likely. But hopefully we're going to get back to this, normalcy pretty soon. The other thing is to try and identify new opportunities. We've got this changing environment. And so is a new opportunity open for you? I know, for example, I read recently that Marriott was getting into the rental house business. So that they think maybe people are going to rent houses more than staying in hotels, because hotels are high density. If you go and rent a single family home while you're on vacation, you can kind of, corral yourself. If you want to eat in, you can do that. You don't have to go to restaurants, however they want to do it. So, just kind of think about your business and what is available to you in redefining how you serve your customers and what new service line or product line that you can offer. Certainly we've seen, we have a client that is a manufacturer, and they an auto parts, and they started manufacturing the N95 masks to help out. So we're not only seeing opportunities for people, to do different things in their business, but also to help out the community, which is really great. I commend them for doing that. The last thing you want to do in developing that customer plan is really kind of considering running cash flow projections. You want to make sure that, I say 1, 3, 6, 12-month cash projections. Probably a 12-week kind of rolling cash budget would probably, something that I would recommend, so that you can kind of see where you are and on track. So certainly you can use a 12-week period from the same time last year and see where you are from an actual standpoint, and then kind of say, okay, well, we're gonna, at May 1st, we're gonna start opening, and our cash flow projection is going to increase, 10% every week until we get back to normal, or 15%, or whatever you think it is, depending on your business. It may be more. It may be, that you're going to have exponential sales. So it's really kind of up to you, and certainly, you can have someone help you with that knows numbers a little better. I think I know a few, about 150 professionals that can help you with that. But, so just kind of keep that in mind. Other things that I saw from Senator Scott's office just recently, some questions that were posed to him as far as how to treat employees and customers that are coming into your facilities and whether we're reopening or not. Are you going to have to take temperatures before you allow anyone in your facility? Like I know the cruise ships started doing that before they closed down. Will your business require any kind of federal or state officials and their capacity, testing capacity and things like that? And so if we don't have the tests necessary to open your business, when is that going to happen? Personal protection equipment, sanitizing products, you want to just make sure that all of those things are part of this plan, because that's what people are going to expect. Some people might expect from a customer standpoint they may feel better about buying American-made products. So you may want to consider, where your products are coming from and to help you make your customers more comfortable. Okay, next one is protecting your supply chain. And supply chain is kind of a manufacturing term, but you really need to understand where your products and services are coming from. And those products and services can be, pretty much anything from an office environment. If you have office supplies, certainly toilet paper, the short supply of toilet paper has been in the news. And so can you even get that from your business, from your same supplier that you were using? Do you have to go to a different supplier? Do you have to get, office equipment, or, who's shipping faster? How do you get things in your business in a timely manner? So you've got to figure that out. And so you got to look towards alternative suppliers, alternative products and services that you really, so once again, getting back to that inventory, do you have inventory coming in from China? Is it safe to bring inventory in from China? All those types of questions that you have to do and make sure that your supply chain really has still there and available, because every state's going to be different as far as how they're opening. So if, let's say New York may open later than Wisconsin, but if you've got a supplier, hey, I can go to Wisconsin and get something because I can get it now, versus if I use my old supplier in New York, I may have to wait some. So, those are some types of things to consider from your supply chain perspective. Don't just think about it as, a manufacturing thing. Next up is securing your workforce. Really, to me, this is one of the most important things that we can do right now. Remember that these PPP loans are to pay your people even though they can't work in your business. So, for example, restaurant employees, you've got these PPP funds are made to pay them. That's why they have this 8-week period that you have to use in order to do that. Well, let's look at our skills of our personnel. So let's determine, what are they capable of besides what they were doing for me? Can they do other things? Okay. You can use some metrics that you have in your business. So if you've got salespeople and you can, measure how well they do sales, or if you've got a restaurant, how well servers do in turning over tables. If you've got key performers, you've got to look at your key performers in identifying those key performers and start with those and making sure you secure them, and making sure they come back, making sure they know timing, you keep up with them and keep that going, keep that communication going. Replacing poor performers. There's going to be a lot of jobs out there and a lot of people looking for jobs once the country reopens. And so you may be able to look at different workforces and have different opportunities to maybe say, okay, well, this person wasn't a great fit. Let's go and see if there's someone else that we can find. You've got to have a rehiring strategy. That 6-month rolling window, even with that cash flow that we talked about, that 12-week rolling cash flow, it's not just incoming cash flow, it's outgoing cash flow. And certainly, how much, do we have in our personnel? That's cash going out. And so we've got to be able to make sure that that rehiring strategy fits our revenue strategy as well. The most important thing is provide training to cross-utilize your team. And so, because you may have a limited, number of employees at the beginning when we reopen, and then you may have a need for more as you go. But one of the things that you can do right now in your business for people who are not able to work is get them trained. Okay, if you've got software that needs to be, I know we can use this software better, but we've never had time to figure it out. Earmark 2 or 3 employees and say, hey, this is your responsibility. Go figure out how our POS system can work better. How do we, automatically calculate sales tax, or how do we make it talk to QuickBooks better, or, things like that. There's plenty of labor-related things that you can learn on YouTube. I mean, how many of us have done a home repair on YouTube or things like that? Have them go through and find these types of things that they can do and learn about your business and how to make your business better. I mean, if you've got a PPP loan, you're paying them already. So even if they're not coming into the office or coming into the establishment, whatever, let them do training so that they can come back and infuse ideas or infuse efficiencies into your business. These are the people that make your business run. In uncertain times, we have to do things that are more certain. We can be kind to them. We know we can do that. We can take care of them. We can build a better workforce when they come back, and we can build an environment that people want to be in. And so if you've never had time to kind of look at, okay, how do we treat our employees? How do we, what benefits do we offer them? This remote workforce now we have, that people are talking about whether we'll need as much office space that we normally have, because people really like working at home. There are some cautions about that as well. I was having a conversation about this this morning. Digital relationships, you have to work harder at them. We have virtual happy hours on Friday afternoons now, because everyone's at home, and so we kind of miss each other. And so how do you do a virtual birthday party? Those type of things in building relationships with a remote workforce are some of the challenges that you may have to think about when you secure that workforce. The last thing is June 30th. If you have a PPP loan, June 30th is kind of our deadline to have everyone hired back in order to get that full forgiveness on those PPP loans. We're still getting guidance on what all that means. So bear with your service professionals and your banks and people who are calculating these things, because we really don't know yet. Finally, activating your Salesforce. Developing a plan to let your customers know that you're open for business. Right now, my wife and I talk about, okay, is this person open or is that person open? So we're trying to do things that we can't, maybe necessarily do during the day because we're both at home. My wife's taking care of the kids in school and doing things like that. And so, it's a different world. So you need to get out, that plan to tell your customers that you're open. You want to target, from a Salesforce perspective, high profit clients or high profit demographics for that initial startup. So if you're going to develop incentives for customers to come in, it's like, who do you want to send that to? Who do you want to target that to get your business rolling? Well, the highest profit items, to sell and to infuse the most cash in your business, so that 80% of your business comes from 20% of your customers. That theory, those are the 20% that you should really be, really going after and making sure that they know you're open for business and that they have an incentive to come into your business. And that's the next thing, is developing incentives for customers. Having specials and incentives really goes a long way with customer loyalty. I can't imagine restaurants nowadays that don't have an app, that don't have like rewards, a point system or something that however many times you come, then you earn $5 or $10 or whatever. I use those a lot extensively. The other thing that you can use with apps is what we talked about before, is reaching out to those customers and through your app and sending them that incentive, making them feel special and worthwhile. The incentives as well as the customers really go a long way. So, and then, you can do these specials incentives for a limited time. So make sure it's not just something, oh, come back and we'll, do this. say, come back this week and it's good for this time frame only, because we want you to do business with us right now. The other thing is understand what your competitors are doing. You can, certainly it's difficult now because people, your businesses are closed. You may not have a good pulse of what's going on, but certainly you can look at social media. What are they putting out there on social media from a competitive environment, and looking at different places. Certainly if they're advertising, you want to make sure that you're out in front and make sure that your Salesforce is ahead of your competitors, because the earlier you get back, the more market share that you have in order to open your business and start inflecting cash into your business. The last couple of things is really make a target date for that opening. Begin your marketing plan at least 2 weeks before opening. It may even be more, depending on what your business cycle is. But if okay, the president says, all right, we're good to go as of May 15th, and we know that, then in about a week at least, you should start planning for that. Planning how you're going to activate your Salesforce, and this whole plan has to come together by that 2 week period in order for you to be ready to go. The last thing is that you can create demand for your products. I'll never forget my friend Rob up in Atlanta. He used to go to this restaurant every Friday. They would have a rib special, and they'd only have a certain amount of ribs. And so if you weren't there at 11:30, between 11:30 and 12, you didn't get any, because that's how good these ribs were. They created demand, and by 1 o'clock, everybody was cleared out of there. But it was very specific time frame. They created demand for their product because it was limited, and they were able to bring customers in. So really, that's what you're looking for in your business, is how do you create demand? All right, so now that's kind of the short term. Now let's move on to the long-term things. Working on your business. That is really key right now, is because a lot of us don't find the time. We're too busy to work on our business as opposed to working in our business. So it's time to shift focus and really see what difference it can make in running your business better, running it more efficiently. In my business, we're starting to see like artificial intelligence changing the way we offer services to our clients. And so, we're going to try and implement those types of things, automating that report, moving that equipment more easily. How can you put these things into place right now? So in the manufacturing terms, we've got this 7 wastes of a business cycle. And so that's what we're going to go through next. Toyota Corporation came up with these in a manufacturing environment. So many of you that are on the phone now watching this, you may have seen this from a Six Sigma type atmosphere and how it applies to your business. But I'm telling you right now, I'm here to tell you that this applies to every business. And so we're going to go through these one by one: the inventory, waiting, the defects, overproduction, motion, transportation, and overprocessing. We're going to go through all these. I kind of tell you how it means and what it means to your business, and what you can do in order to find those wastes and be more efficient. So the first one is overproduction. And if you are a TV buff, you will certainly recognize this clip here over on the right. And I can't play the clip for you without going through some hoops here. But if you get the slides on our website after today, you'll be able to play the clip. But it's a hilarious clip. And this is from I Love Lucy. And Lucy and Ethel are working in a chocolate factory. And the boss comes in and says, okay, I need you to wrap all these chocolates that are coming on this conveyor belt in front of you. And I don't want one to hit the floor. If one hits the floor, then you're going to be fired. And so, they start the process, and the candy's coming out nice and slow, and they're able to do it. And they're saying, oh, this is easy. This is easy. And then you see the conveyor belt pick up, and the pieces of candy are closer together. And very, very quickly, you can see kind of the mess they're in now, where they've got chocolate all over the place, and they're stuffing it in their mouths. And by the time this clip is over, they're pouring it into their hats. And at the end, they've got all the chocolate cleaned up because it's in their hats, it's in their mouths, it's in their shirts, it's everywhere but on the table. And the supervisor comes in and says, oh man, this looks great. Okay, speed it up. And but then Ethel and Lucy kind of just have that look on their face of absolute fear. But that's the overproduction. Making copies more than are needed. So in an office environment, it's like if you have a need for 5 copies and you're making 10 because you don't know how many you need, well, you're overproducing. If you create reports or documents that no one reads, you're overproducing. Multiple meetings about the same issue without making a decision. How many times has that happened in your business where you kind of have a meeting and then you table it and then you come back to it? Well, that's an inefficient process. Every time you pick something up and put it down, pick something up, put it down. Those are the types of things that we want to eliminate. So really overproducing can really be a big waste in your business cycle. The second one, waiting. Time is not being used efficiently. 90% of the business cycle is waiting. And waiting can apply to any business. It can include waiting to get paid. That's part of the business cycle. Waiting for information, waiting on customers. Think about what would happen if produce just kind of sat and waited on docks. I mean, it would spoil. So what we want is, our goal is to have a smooth and continuous flow between each process step. Okay, eliminate the wait time. All right, transporting is number 3, and transportation of products, equipment, materials, people, without adding value. Okay, that's where the waste is. So this little cartoon that I've got here, he says, oh, we're about to start building on site, lot 37 and 12. Well, I need to move this dirt off of lot 37, put it on lot 38. Well, what happens? What do you think happens to that dirt when they need to do lot 38? Then they got to move it again. So it's inefficient of transporting goods. It can be, moving training materials or supply, transporting patients, staff cubicles, office moves. It could be delivery of materials. We used to send our tax returns, and we still do to some clients, everything by mail. Well, or the clients would come and pick them up. Well, now we have a portal that we can just electronically deliver that to them. So we've eliminated waste in our business, cut down on paper, cut down on time that the clients have access to it, and things like that. One of the things that comes to mind as far as transporting, I was recently watching a TV show, and they were putting a crib together in their living room. And I have kids, one's 10 and one's 17, so it's been a while since I put a crib together. But one of the things that I did learn when I had a crib is that the very first part of the instruction says, set this up in the room that you want it in. Because what they don't tell you is on TV, when they show you that they're building it, is that when they go to put it in that nursery and go to the bedroom, the crib doesn't fit through the door. So the transporting of that really needed to happen before you started putting it together. So those are the types of things that you can kind of think of from a transportation perspective in getting the waste out of it. Now, inappropriate processing. This is, the old term says using a sledgehammer to crack a nut. You can see in the little cartoon here that the guy wants to first send him a PO, and then he's going to upload it, and then he's going to make it available online, and then he's going to fax it to him, and then he's going to email it to him, and and do all these things just for one invoice. And the guy is just looking at him like he's crazy. He says, no, just send it to me one time, and I'll get it done. And so, are you using the right tools or processes for that job? For example, if you prepare a glossy report, when all the customer really needed was an email with some bullet items on it. Requiring too many signatures. I know a lot of nonprofits out there require, multiple signatures on checks. It's like, can you figure out a different way to do that from a digital standpoint? Can they approve it digitally? Taking 30 minutes to prepare an email. When you could pick up the phone and call someone and have a conversation with them in 1 minute. So those are the inappropriate processing that we look for in our businesses to kind of cut down on how we're doing things. Number 5, unnecessary inventory and WIP. And this is the result of overproduction and waiting. Okay, we already talked about those two. If you've overproduced and if you have items waiting, then you look like the guy in the picture with the door bulging out with all its inventory. You got to reduce that work in process, and it allows the other problems to surface. Here's what I mean by that. The analogy often used as a ship, and a ship is sailing in a sea of what we call work in process. Okay, so imagine the water is the work in process, and there's rocks hiding underneath that water level. Well, if we've got too much water in there, the rocks are going to be underneath, and the ship is not going to be able to see those rocks. And so if we lower that water level, if we lower the production, we lower the weighting, so that inventory that we have, okay, then we can see those rocks and we can navigate through. So buying and storing more products than you need, filing and storing the same document in multiple locations. How many people do that? Okay, well, I put it on the network, and then I put it on my C drive, and then I put it on a flash drive, and then I put it on, it's like, find one place, be efficient in where you're doing these things. Non-compliance with or unnecessary long retention policies. I know that in our business, for tax purposes, we have to maintain records for 7 years. Well, I know when we used to have paper documents, we used to go through every year and take out that 8th year. Something was 8 years old, we used to take it out, have it shredded, and we would keep 7 years. So kind of look at what you're doing as far as what you're keeping, what you're storing, and making sure that it's not unnecessary. Number 6, unnecessary motions. This is related to ergonomics, stretching, bending, reaching for something. What are you doing with your body to make things more efficient? Certainly in a digital environment, it makes one rethink these types of things. Just recently, I know that some of the things that we're doing, we have an advanced version of the PDF, the Adobe Writer. And so we're able to do signatures right in Adobe. And so now, instead of, somebody sending me something to sign, instead of, printing it out, signing it, scanning it in, emailing it back to somebody, I just open up my desktop, click on that button to sign it, put my signature where I want it to go, and I email it back to them. I don't have to print. I don't have to do anything. And so what is that? That means I'm not using paper. I'm not wasting things. Ink is very expensive nowadays for printers. So all of those types of things can help you be more efficient in your motions. So what reports can you automate? Walking to the copier. Think about that. How far does somebody have to go to walk to the copier? Bending down to access equipment. Can you move it up so they can reach for it a lot more easy? Reaching to answer your phone. Would you be better off using a headset if you're on the phone a lot? Lifting heavy boxes and moving them, as opposed to maybe putting them on a cart and moving them. Processing checks manually instead of or having a manual accounting system versus going to an automated system or an electronic version of one. So all of those types of things can eliminate unnecessary motions. Even using software better. Making sure you've optimized the software so you can do something in 1 click instead of 3. So those are the types of things that we can look in our business of how we can limit those unnecessary motions. We're coming to the end, folks. This is number 7 of 7, and this is defects. And I know around our office, this guy is well known from the movie Office Space. And he is kind of one of those guys that, is just like, yeah, if you could fix all those defects, that'd be great. Defects cost money. They cost time. The only thing they affect is the bottom line. Okay. Defects affect your, warranty claims, on-site repairs. You've got loss in customers. This can happen in the service industry too. You go out and you make a service call and you fix the wrong thing, and now you got to come back out again and do it right the second time. So, providing the wrong product or service is certainly a defect. Missing or incorrect information in an application or a form. How many have experienced that in the PPP application process? You submit something, then the bank tells you they need something else. Then you submit it, and then they tell you they need something else. Well, that's a defect in the process that we have. Certainly in this whole process, we have lots of defects as we're getting. We're still lacking information on some of these things, but that's what we're looking for. So even in an incomplete form, Is there a way for you to make sure that a customer fills out a form entirely? Electronically, that's much easier to do versus a paper document. Even in the restaurant industry, serving the wrong meal, taking the order wrong, that's a defect. You got to fix the meal, so you've wasted a meal. And then just get that process right the first time and through the process, as opposed to inspecting the results. Okay, that's what a lot of us do, is we get through everything, we get to a final product, then we inspect the results and figure out, oh, okay, now we got to go back and change it because we did this wrong or we did that wrong. So make sure, and that's what Toyota really did well at when they were putting their plans together, is they decided, instead of inspecting the car at the end, that we're going to go and do it as we go, so that we're going to have a well-oiled machine at the very end. All right, so that's kind of really the presentation. I want to just leave you with some parting thoughts. So if you've got those questions, now's the time to really kind of put those in our chat feature. If the plan doesn't work, change the plan, but never change the goal. Okay, so our goal is to have a successful business. Our plan has certainly changed over the last month or two for all of us, and so we need to change our plan. And using these tax incentives to induce cash into your business, develop a reopening plan, evaluating your business for waste. I mean, these are all the things that you can do right now, and get your employees to help you. You're paying them. If you have that PPP loan, you're paying them, whether they're showing up for work or not. Get them to help you improve your business, and they'll be much more engaged in the process as well. So help is just a phone call away. My contact information is right there. Certainly you can call anyone at Saltmarsh using our 800 number. That's my email address, and we're going to have that in just a second. I'll bring that back up. But I did want to mention a couple of other items. You can find this presentation, as well as any information that we have related to this COVID-19, up on our up on our website at saltmarshcpa.com/COVID-19. You can sign up to receive email updates, so whenever we put something new out there, you'll get it. Next week, you can join us again. I think Stefan Reyes, who is our director, our IT director, and my shareholder that does all of our IT services. He is going to present on staying connected and empowering your team using collaboration tools, just like the one that I'm using right now, to be able to get this information out to you, and some of the other things that are available out there that you may not know about. All right, questions. Jamie, do we have any questions?
Yes, so we have received a couple in the chat, and we'll give everyone an opportunity to add any others during this time. We did get one question about whether the presentation materials would be available. So everyone who is here today will receive an email with those materials and a recording of today's presentation as well. The next question that we received, I think, relates back to the tax strategies you were mentioning. It may be specific, but it says if you have to replace a roof, would that qualify? I believe under the qualified improvement property. Glenn, any input there?
Yeah, so really roofs are probably one of the most difficult thing in determining whether you can deduct it or whether you have to capitalize it. It does not fall, I don't believe, under that qualified improvement property, but depending on what you do with the roof, you can either deduct it or capitalize it. So kind of beyond the scope of this presentation. But certainly, if you want to reach out to me, we can talk about it further. I see who asked that question, so I know her. I can reach out. What else we got?
We don't have any other questions at this point. I know we've got some of our Saltmarsh folks on the line. If anyone would like to propose a question, or any of our attendees, we can hang on the line for just a few minutes and address those with you. Norm has confirmed roofs are not considered qualified improvement property. Thank you, Norm.
All right, well, oh, sorry, go ahead, Jamie.
No, you're good, Glenn, go ahead.
I just wanted to say, thank you everyone for coming today. really, we've put a lot of thought and effort into this in trying to help our clients in outreach. And it's a really difficult time to do that and really take the time out of your business to really focus on some of these things. Hopefully you've gotten some good ideas from these presentations. And that's what we're trying to bring to you even next week is, those efficiencies that I was talking about with these collaboration tools. We've really become experts over the last month or two on collaboration tools because we are all working remotely. So, I encourage you to reach out to, if you already use Saltmarsh, reach out to your service professionals, see how, we can help you if you need a strategic plan. We can certainly help you through strategic planning and really kind of, make sure that you're thinking about the right things. So hopefully, Lee says, let's all be ready to come out of the starting blocks very fast. So yeah, I agree, Lee. We will be going very fast. It will be a mad rush to get everybody working again and back to normal. So everyone take care. If there's no more questions, certainly you can post them on our website, or you've got my email address up on the screen. Feel free to email me separately. Thank you very much, everyone.